All right, if you're a real estate agent that is wondering exactly what the Fed fund changing its direction on policy, how does that affect mortgage rates? How does it unlock inventory? How does it give you the opportunity to serve your clients at a higher level? We got the best in the business today. My buddy David Childers with Keeping Current Matters. David's going to break down exactly what we're seeing right now, how you can communicate this, and then at the end, we're going to give you some exact steps you can take right after this video to add value to their agents. Is going to make your phone ring as well. So David, if you don't mind, let's just get right into this. What are we seeing these days? So why don't you just kind of, what we saw this past week, tell us exactly what we're seeing and kind of set the stage if you don't mind.
Yeah, no, Jimmy, it's very interesting. A couple of weeks ago when the Federal Reserve met in Jackson Hole, Wyoming, they said it's time for policy to change. Last week, they came in and cut the Fed funds rate by 50 basis points. There are a couple of things I'd want everybody listening to remember. One, the Fed funds rate, the Federal Reserve, when they cut that, that's the intraday rate that banks charge one another to lend money overnight. It's the old prime rate. We don't talk about prime rate as much anymore, but it does have an impact on the mortgage market. So that'd be the first thing is the Fed does not control mortgage rates. They can only hope to influence it. And, in this rate cut, they came out, several weeks ago in Jackson Hole and said, we're going to cut rates in September. And this one was largely priced in because when they made this move last Wednesday, we actually saw the 30-year fix tick up just a little bit,
Right.
So it doesn't have a direct impact. I want everybody to realize that. Now what we're looking for are the reactions to it, and we've sort of seen that. But I guess my message right now, and you and I have talked about this, and we've, over the last several days, we're learning more, is we're in a volatile market. I was on a flight yesterday, and we were sort of coming down, and something happened that never happened before. The plane started to, shake a little bit, and the pilot came on immediately and said, get your seatbelt on low and tight. I'd never heard that before, like that quickly. And I'm like, well, didn't love to hear that, but I think it's going to be a bumpy ride coming down with mortgage rates. I wouldn't expect this to be a straight line, as we go through the next several months and into next year.
Yeah, the good news is the plane is heading towards a landing.
Right.
That was one thing. One of the things that I would say kind of to add to that is, as we're thinking about this and seeing the rates, because I think a lot of people just think that immediately there's going to be reaction.
Right.
But a lot of times what the markets will do is it will almost make a move in anticipation. So in other words, some of the economists are saying, hey, when we saw rates actually tick up a little bit, even though we had a surprise move of 50 basis points down on the Fed funds rate, the market had almost baked that in.
Right.
So now what the market does is it begins to bake in what it anticipates in the future. You want to tell us a little bit about what this kind of change? I mean, it's been 4 years since we've had this is a complete change in policy. You want to talk about what that looks like?
Yeah, I think there's a couple of things that happen right now. So this was baked in already. We saw really from the beginning of July to today, rates come down from knocking on the door at 7, where we're, right here at the 6.1, let's call it 6.15, whatever the rate is at this point. And so I think as we go through the next several months, and I'll talk about this in just a minute, bring some surveys and some things we're watching at Keeping Current Matters, is that, it's going to depend on incoming economic data and what other Fed chairman, even with this 50 basis point cut, not all the Fed, governors agreed with that. And so the question now is, what's going to happen with inflation? What's going on with unemployment? It's a dual mandate of the Fed is price stability and maximum employment. And so that's what they're trying to engineer is how do we have this soft landing in the economy, not end up in a recession, not light the housing market on fire again. You better believe they're looking at that. Housing and shelter is a significant contributor to inflation, right? It's a big piece of it. So they want to sort of keep their foot on the pedal there and not drop rates so quickly that it just, sort of, it's almost like you go camping. And I don't know if you ever been, folks listening,
I have.
You have a fire and the next morning you think the fire's out and you throw something on it and it flames back up again. That's what they're trying to have not happen in the economy.
Good. Yeah, that's a great analogy. And from that standpoint, listen, samurais have their swords. David Childers has his slides. That's let's take a look, because nobody does it better than Keeping Current Matters research team to give us the
They do a phenomenal
visuals.
job.
They do, and to give us the visuals that we can then share as agents with our clients, to help us get together with that professional local market opinion. So if you don't mind, I'm going to let you, if we can, let's get into some of those things that you guys are seeing right now, and maybe what agents can do to do that.
Yeah, I knew we were going to do this, Jimmy. So I pulled a couple slides, and I want to do a couple of things. One, what's ahead for us? Okay. Two, what are we watching at Keeping Current Matters, and sort of communicate that to everybody. And then three, what you talked about on the front end, how will this impact our market, specifically those that are thinking about selling, really unlocking inventory. And then we'll maybe after that can have a short discussion on it. But let me share my slides. I always love doing that. The KCM team does a phenomenal job of gathering all this data. But right now, this Reuters poll that I'm showing, most economists expect 3 rate cuts from the Federal Reserve this year. We saw the first one happen, right? And whether this is 2 or 3, the point I would say here is that we're talking about how many versus are they going to. Okay, that's right. A big point that I'd want everybody to remember. And so that's this year in 2024. And then next year, I can tell you in 2025, most would expect 5 to 6 rate cuts. So I mentioned before, it's not going to be a straight line down, might get bumpy, a little volatile. And my thought here is, if you see a good rate for someone, don't get greedy. Right? If you see something and folks say, hey, we're ready to move with this, we might get better next week. You might not, right? We might see this market that's sort of up and down, but the trend that we're following is definitely down over the next 6, 12, and I'm going to call it 18 months, as we go through this adjustment. We look in the rearview mirror the last 2 years, rising mortgage rates. So we've sort of transitioned from that. I mentioned before on calls that I've been on that the equivalent to this with the Federal Reserve's action is almost in a sickness, the fever breaking. And if you've been sick before, and that time comes where you sort of kind of go, okay, I'm getting a little bit better. Doesn't mean we're out of the woods. It means that we're heading in a different direction right now. And so I think that's what we have up ahead. And I certainly have an optimistic perspective on that. Not rose-colored glasses. We still have challenges, no doubt. But I think we will see a little bit of help in the affordability of buying a home in the coming months. But here are the things real quickly that we're watching at Keeping Current Matters. And I'd recommend anybody listening, stay connected to a source of knowledge. Stay connected to Jimmy. Jimmy, you're doing so much right now to educate agents, and folks need to stay connected. But the first thing that we're watching is the 10-year Treasury yield. And you see right here, I've thrown this graph up here. The 10-year Treasury and the 30-year fixed mortgage rate have had this symbiotic relationship for the last 50 years. And the spread between them has been what they would say 175 basis points or 1.75%. And so we can watch the 10-year Treasury and see, okay, what is the direction of mortgage rates? And I'm not saying everybody here has to become a secondary market expert, but it is something that you want to keep your eyes on. And so over the last several days since the Fed's rate cut, our team's been watching the 10-year Treasury, and it's kind of ticked up a little bit. We saw the Fed cut rates and mortgage rates actually tick up a little bit. And so that's, the educated agent understands that and knows that about our market. But if we even take the 10-year Treasury, you also want to watch that spread that I mentioned was 175 basis points. They're the average spread going all the way back to the 70s because of this right here. What I know is the change in spread. This is a look at that same graphic, but from the beginning of 2023 until today, the spread is starting to come down. And I always equate, Jimmy, the spread as a measure of fear in the market, right? As inflation has risen, people are like, are we going to be able to afford to buy a home? Heck, are we even going to be able to afford to go to the grocery store? You know what I mean? Prices of things have gone up, and there's a lot of fear in the market. But the spread's starting to come down. So as we go forward, I believe the 10-year will come down. I believe the spread will come down, which will bode well for mortgage rates. I can tell you this: every forecaster that we follow that forecasts mortgage rates for the next 6 to 12 months has them coming down. The other thing I'll guarantee you, if you try to forecast or predict them, you'll be wrong.
Right.
But I think we can look at that and say overall we will be in a better, more affordable market in the coming year, which is a very, very good thing for anybody thinking about buying. I'll give you one more slide, and this is probably one of the good ones, Jimmy. I know you'll have a lot of great perspective on this as you're helping agents unlock inventory. And it's this one right here. It's a survey from Bankrate where they ask the question, which mortgage rate, if any, would you need to be comfortable with doing something, with selling a home this year? Okay, this is important. 35% of potential sellers said if it gets below 6%, I'm in. Right, so that's a third of the market that's on the sidelines. And oh, by the way, I've mentioned this many times. 70% of potential buyers abandoned their search in the past year because of rising costs, because of affordability. And so a lot of those are sellers, right? So you take a third of the market saying we get into to below the 6s, get into the 5s, we're interested, we're going to do something. You get another 30% that says we get below 5. So you have 2/3 of the market that says, hey, we're getting into this range. Now, I want to be clear. I don't see any forecasters in the next 12 months saying we're going to get into the 4s. But I do think we are at a place right now where there's a significant number of people that have put off selling their home for one reason or another that are going to start to perk up as we see this downward trend. And I'll pull the slides down here real quick, Jimmy. I think this is what we're playing for going forward. I think this could be the thing that starts to unlock some of that inventory, in the coming months.
Well, that's the biggest question, David. And if you ask anyone, because a lot of forecasters are saying, hey, based on the Fed changing, the direction. Yep. And so now here we are, and we've seen mortgage rates drift down over the last few months, obviously over the last little while. I mean, since 2023, really. I mean, we've seen that drift from that 8% down to where we are today.
Yeah, right.
So with that trend moving in that direction, the biggest question that people have had is, hey, I've got a 3.5% mortgage. I'm not going to leave this mortgage to go get a 7% mortgage. Right. So the question that everybody has is, hey, I hear you saying that, hey, based on mortgage rates coming down, we may have a stronger than anticipated fall and into the spring. Mm-hmm. But where does the inventory come from? So that is the very slide to me that answers that question. When you've got respondents saying 35%, a third of the market. Hey, listen, if we can put up a third of this market with the potential to have that inventory, a portion of that inventory, because not everybody's going to do what they're saying there, but a portion of that to actually come to market, that's the rotation of people. And these are people that don't just sell. These are sellers that then buy. So this is a domino effect on the number of transactions that we have in the marketplace, which is pretty significant.
Yeah. So here's what I want to do, Jimmy. I'm going to flip this around on you. You're usually interviewing me. I'm going to ask you a question on this. I will tell you this from the data. There's the old saying, the map will appear when the car is in motion. The map starts to appear is this downward trending mortgage environment. We know surveys tell us more sellers will come in. They've told us that. So my question to you as you're coaching agents is, how do you not take advantage, if that's the right word, how do you prepare for that?
Yeah. No, look, that's the big question. And I think you're absolutely right, because I think we're always eating and we're always setting the table for the next meal in our businesses. And so from a standpoint of right now, in my opinion, I want to talk specifically how to set the table. Okay, because this information gives you the ability to take action today that will not only potentially have the people raise their hand and be ready to work with you now, but it really fills your pipeline for the next spring. I mean, as we're recording this, here we are. It's September 21st. We operate on a 60 to 90 day time period from the time that we initiate conversation to showing houses or listing a house to going under contract to closing. So if you're thinking from the cycle of the business, in reality, the actions you're taking today and over the next couple of 60 days is really setting the table for your 2025. So let me give you some things to do today, okay? Because I think there's 3 ways to take advantage of this. And here's the problem is when there is a lack of clarity, which most agents don't have. If you're listening to this, David just gave you some clarity on some talking points you can do. Now I'm going to tell you how to say them and utilize them. But take action, because while everybody else is frozen, when you take action, you have a lever that you don't always have while everybody else is in motion. So first thing is this, and this is a shameless plug for you guys because I utilize it. Obviously I utilize everything you guys have got. Go to KCM. You just saw the slides. Look, we're going to have the slides. If you want these slides, just comment down below or look in the description and we'll have these for you where you can grab these. But go to trykcm.com, set up your account if you don't have it. They have blog posts, videos, social posts. You guys do all of that for you. So if you want to hit the easy button, just go to trykcm.com and you're going to be able to set up and be able to do that. The second thing is let me give you a couple of different ways. I'm going to give you my best way, but I'm going to give you the best way I've seen also. So you and I were on a live, and thank God you showed up, because this discussion between Jimmy Mackin and I about trying to talk about rate spreads, as him a marketer and me a sales agent, was less than professional the way you just did it. Let me just put it that way. So literally Jimmy texted me and said, thank God for David Childers. That's what he texted me because we were floundering a little bit. When you jumped on and we started talking about these things, Jimmy is a marketer. So one of the things that he did, and I think you and I talked about this, he sent an email out almost immediately on how to send this to your database. I'm going to give you the talking points because I keep this stuff close by.
Yeah.
Let me get.
Nobody better than Jimmy to do that. You know what I mean?
No. And so listen, I'm on the mailing list for Listing Leads, that he co-founded with Tom. And so this is what he sent out. I'm just going to give you the headline. And I want you to think about this. And you can go to Listing Leads and I think they've got a free trial too and get their stuff there. But basically, here was the headline or the subject line to send out. And I would say, send this to your database. The 1600, and this was then, so that was a couple days ago. The 1685-day wait is over. Yeah. That was the subject line. Captures their attention. And then it comes in and it says, it's been 85 days since the Federal Reserve last cut interest rates. During this era of rising rates we've seen, and it's bullet points, mortgage rates peak at nearly 8% in October 2023. Another bullet point, existing home sales plummet to 1995 levels. Next bullet point, home affordability hit a 40-year low. The next line is, not that this fixes everything, but the Fed is signaling that this is the beginning, not the end of rate cuts. And he goes on with his call to action, look, get creative. I just want you to think about the framework of how to do this and how to put this in a position to your database, how to put this in a position as a social post. The third way that I would say to utilize this is the way that we've been seeing. Instagram's algorithm loves the green screen video now. And if you aren't familiar with what that is, it's literally just having something behind you. And if you aren't sure how to do that, just go to YouTube and say, how do I do an Instagram green screen video? Somebody's going to teach you exactly how to do that. And then it's going to have, so I would take the slide from KCM or an article, whatever it is that you decide to do, put it behind you with the headline. And on that, you can either utilize this. For me, what I would do personally, I would actually think about utilizing that slide that said 35% of the market opens up potentially, that sellers, homeowners have said that 35% have said that once rates are below 6%, they would consider selling. And this is exactly what it would look like. I would just simply say, there was a study recently done that shows that 35% of homeowners would consider selling if interest rates got below 6%. With the recent change in Fed policy and the way we've seen the trends for rates, we're now seeing rates just above 6%, with the potential for that to change over the coming months as the Fed has changed their monetary policy and is heading in a direction for lowering the Fed funds rate. If you've been wondering, how will the real estate market have the opportunity to find homes that are possibly going to come to the market that are not there today? This study right here tells us that over a third of the market will be considering those things potentially within the next few months. If you're someone that has been considering selling your home, there is an absolute opportunity right here for you to prepare yourself to maximize your price. I wrote it down. Let me get this too. I wrote down kind of what I would do, because you want to have a call to action on these, okay? So what you want to do is you would say this. If you're someone that is considering selling your home now or potentially in the spring, or have been waiting for the market to show you a sign of when it might be the ideal time for you, not just to sell, but to buy a home, I've put together, and this is what I did, 7 things every homeowner must do before listing their home to maximize their sales price. Now, look, you can Chat GPT can do this for
Right.
you if you're, what does that need to be? Just simply ask Chat GPT. It's not as much about the information as it is the people will raise their hand and say, I'm that person who literally would move if the situation was correct. Now you can begin to do that. We're asking them to raise their hand. So 3 ways to take advantage of this. Number 1, if you want to hit the easy button, try KCM. If you're looking for a specific thing, go to Listing Leads and just do that, what we just talked about, to send to your database. And the third thing is to do the green screen video to have sellers raise their hand. Now, listen, on the buyer side of that, we're going to talk about, I think you and I need to do this where we talk about from the buyer side.
Yeah, we can do that.
So here's one that if you're doing that green screen, 7 things every home buyer must do before seeing homes for sale to find their dream home and buy it at their dream price. Again, these are calls to action that will make those potential clients and prospects raise their hands. So the bottom line is this. I love what you said about stay connected to a source of knowledge.
Yep.
The
And
thing
I'm
is
gonna tell you, Jimmy, you just laid it out right there. I mean, nobody better to say, hey, here's an insight plus action. That's what we're talking about, right? What are we learning about what's happening in the market? And then how are you taking action? I mean, you laid it out wonderfully.
Yeah. Hey, listen, and as we become closer friends, I know your heart, and your heart is to give people the tools and the technology and the data that will help them serve their clients better. That's what we're all about. And so, listen, David, I mentioned TryKCM. Is there anything in particular else where you would point people if they wanted additional information, or anywhere on, obviously I follow you on Instagram. It's a great follow there. Anything additional?
Yeah, follow KCM, follow Jimmy and I on Instagram. But I would say this, go to trykcm.com. If you're not a member, you can go in and start a free trial. Just check it out and see if it's right. But here's the reason why. And I want to go back to what you said. And our friend Jimmy Mackin always says, the more you communicate in multi-channel fashion, right? Everywhere I'm at, I want to communicate, whether it's social, whether it's a blog post, whether it's an email, whether it's a newsletter. I'm trying to get this in as many channels and as in front of as many people as possible so that I can then start those conversations. And you laid it out very, very well. But yeah, if you're not a KCM member, go in there and check it out. Love to have you do that. Knowledge
without action is useless. David just gave you the knowledge. David just gave you the information. The people that you are supposed to serve, buyers and sellers, need that information. Please take action. Give them that value, and I promise your business is going to reflect you taking that action as well. Take care, and we'll talk to you guys soon. Thanks for watching the video. I specifically chose the video below for you because it builds on the one you just watched. I hope it's helpful, and I'll talk to you soon.